live. There we go. Now we are live. Hello, everybody. Welcome. Happy Thursday. Happy St. Patrick's Day. Today we are going live with Marla from Cross Country Mortgage. Just for a reminder, for those who don't know, I'm Maggie Nielsen. I'm a partner at Purse Strings. We're all about providing financial education for women. That's why we have these wonderful sessions with people like Marla. But then we have our Purse Strings approved professionals who are professionals who love to work with the female market, really have your best interest in mind, want to be part of your team. And we call those our Purse Strings approved professionals. So Marla is one. She works at Cross Country Mortgage, and you're in Chicago. I was like, she's not in a burb. She's in Chicago.
I know people in the city and the suburbs, but my office is in the city. Yeah.
Awesome. And so, yeah, for those who don't know you, Marla, would you give a little introduction about yourself?
Sure. So I'm not good at humble bragging, but I know you got to do your little resume. So I've been doing this for 17 years. I'm always ranked as a top producer. I've gotten awards like Scotsman's Guide, which you have to hit a certain number of loans closed to meet those goals. I've been recognized in Who's Who. So yeah, I've done well in my career, and I've done well by being able to help other people achieve their financial goals through real estate. So,
which is awesome. I know it's a big dream for many people. It's a great way to have generational wealth. So there's so many things about buying a home. I know it's I haven't bought a home yet, but it's very life-changing for many. So what you do is so, so important. So today, we've heard about the market and it's very wild about houses. And we hear different things, of way to buy houses of 0% down, 20% down, 3.5%, 5%, so many different options. And there's really pros and cons to many of these different items. So, I was hoping we could just kind of have this conversation about, the good, the bad of these different options, what those options are. And if anyone tuning in has any questions, just pop them in the chat and we are more than happy to take them.
Yep. So there's a ton of different options. A lot of people do have misconceptions that they need to have tens of thousands of dollars before they can buy a house. Right. And it's definitely not true. You usually do need a little bit of money. Even if you do a no or very low down payment program, you have your home inspection, your appraisal. So there's still a few fees. Usually the lowest I've seen is I've had clients who have bought homes literally spending $2,000 or $3,000 out of their own pocket. So that's, of course, not a promise that everyone can do that. Everyone's situation is different. But if you're able to qualify for the down payment assistance and you can negotiate for the seller to help cover your closing costs, it can be a very low cost investment to buy a home. But really, the main thing that I always tell people is everything is customized. So it's not like I can't say across the board, everyone does this program or that. So when people do a consultation with me, one thing I go through is their budget. What is the monthly they're comfortable with? How much money do they have to spend? And then I back into what is the right loan program, purchase price, down payment assistance program, because it really is different for everyone. But the thing is that there are a lot of ways to come up with money. So obviously some people just have savings they've been working on. Some people have their income tax refund coming. If that could be $3,000, that could be enough to get you in a house right there. Some people have retirement accounts through their job, 401k accounts that you can take a loan against. That's a great way to buy a home. And if it's your first home, they have very favorable terms. A lot of people get gifts from family. I know people don't talk about it as often, but I would say probably close to half of my first-time home buyers do get some support from their family. So there is a way to come up with the money, and it's not a ton of money. It's definitely not 20%. If anyone thinks they need 20%, that is complete mythology. And
so, as I've been learning throughout the month, even sometimes now, so people are known for having to pay 20% because there's PMI insurance. Can you just explain quickly what PMI insurance is?
Yeah. So basically, the bank is always assessing the risk factor of giving you a loan. What is the likelihood that you're going to be able to pay them on time and that you're not just able, but you're responsible and you're going to pay them every month on time. So if you have 20% down payment, it's basically assumed that you have enough skin in the game that you're not going to just walk away and let the house get foreclosed, because that's the bank's biggest fear. If you walk away from the house and then they have to own the house, they're not in the business of owning real estate. They don't want your house. So if you have a lot of skin in the game, they think you're a low risk. If you don't have a lot of skin in the game and you hit a financial hardship, there's a higher risk you could just walk away from the house. And so there's this insurance, PMI, which is not the insurance that covers you. It's not like, oh, if your house catches on fire, it protects you. It's an insurance that protects the bank in case you don't make your payments. So a lot of people think, oh, well, I'll just save the 20% to avoid the PMI because that seems like a waste of money. Why would I pay PMI? But the truth of the matter is, if you wait, housing prices are continuing to go up, interest rates are continuing to go up, and ultimately you're likely to pay more with the higher purchase price and the higher interest rate than you would have with the PMI. So it's not like PMI in a bubble. Of course, if it's like pay it or don't. But if you take into account your overall financial picture, usually paying the PMI is more advantageous because you get to buy the house at today's home prices, today's rates, and you start to benefit from home values going up quickly much sooner rather than waiting several years and missing out on that gain in value. That's your profit. So again, it's case by case, but I'm a bit of a spreadsheet geek, if you know me. So what I do is I do a side-by-side comparison with people and educate them on the different PMI options, the overall cost. So we can do some projections of like what would potentially be your profit if you buy now versus wait 2 years and save 20%. Obviously, no one knows for sure how quickly the home prices will keep going up and what the interest rates will be. But it's pretty certain that both will keep going up. And so it's better to buy sooner, even if that means you have to have PMI.
Yeah, and just to put some, I mean, that's all really great points and kind of breaks it down. And just to put some quick numbers, if you're trying to hold, $20,000 to buy $100,000 house, but as we've seen, house prices are going up and they're going up fast. So all of a sudden in a year, that might be a $200,000 house. So while you're still waiting for that 20,000, now you got to be waiting for 40,000 or building that.
Yeah, that's the concept. I mean, it's not likely the house price would double, even though house prices are going up way quicker than normal. But yeah, that's another piece, that the down payment itself would be higher.
Yeah. And so that's just some quick math to.
If the house did increase in value 100,000, that's 100,000 profit that you would have as equity in your new home. And now you don't have that, you're paying that instead of it being profit.
Exactly. So yeah, it's kind of that insurance that since the bank is taking this risk on you. And so like you mentioned, there's like this down payment assistance. Mm-hmm. What kind of qualifications or paperwork do you need for to maybe receive this?
Yeah. So there's several different down payment assistance programs. And again, I do a side-by-side based on each specific client, which one is best for them. A lot of them do require people to be in the low to moderate income bracket. They don't want to be giving free money to billionaires, basically.
Fair.
But it's pretty generous. Like the one program I use the most is through the Illinois Housing Development Authority. And I think their income cap right now, they change it every year. So I don't have it memorized off the top of my head, the new one, but it's around like 110,000. So it's very generous. It's not like you have to be under 30,000, income.
Right.
So it's pretty generous who can qualify for those programs. Typically you need at least a credit score of 640, which is not, it's not, again, 800. We're not talking about you have to be like amazingly, best financial situation ever. It is higher than some other programs. We have other programs that can go down to 580 or even lower, but the down payment assistance programs usually want you at least around 640, but they're all slightly different. So again, it's case by case. But one thing that I really focus on is helping people get to that homeownership goal. So I really believe that anyone can own a home. There's very few cases I've seen where I'm like, yeah, you'll never own a home. It's really just, if you don't qualify now, bridging that gap with education of what do you need to do to get there. So if someone comes to me and they need the down payment assistance because they don't have enough money otherwise, and their credit score is not where it needs to be, I'll give them an action plan that tells them what they need to do to boost their credit, how much money do they need to save, so they at least know exactly what they need to do. And then we check in with them every month or so and kind of make sure they're on track until they ultimately get to that goal.
Right. And I've heard you in some different conversations talk about different techniques to pretty easily raise your credit score. So it's not, if not now, I'm not talking about in 5 years, but maybe in 6 months.
Yeah.
Because of course that takes some time. But it's not, there are many things you can do to raise your credit score enough to get to that point, which I know you definitely give action plan on, which is super helpful.
And sometimes it's quicker. Like I literally have had people see 100-point increases in like 2 weeks. It just depends what is the reason your credit is low, because some things are easily fixable and some things just take time to heal. And usually people have a combination of those factors. So yeah. But there's a lot of tricks, and honestly, I wouldn't Google credit building because there's more bad information than good information. And usually when people do that and they're like, I looked online and told me what to do, I did it, and they come to me and I'm like, yeah, you just damaged your score worse, because the credit system is not intuitive. It's not like, oh, I think I should pay off and close all my debt and my credit score would go up, and it's like you just dropped your score. So I definitely encourage people to come to me first. And a lot of people think they shouldn't call me unless they actually qualify already, like they're ready to buy a house. But I'd rather people call me way before they're ready to buy a house, so we can work on boosting their qualifications, get them in the best tier to get the best rates and the best loan programs. So I'd rather people call me and say, hey, I know I don't qualify, but I want to get on that path. And what do I do so we can work on it together and make sure they're taking the right actions rather than hurting their qualifications more.
Right. And so many people, they think they might look silly, uneducated, waste your time, but like that is your whole job. And so it's not wasting your time. Your whole goal is to get people in these houses and kind of get them those steps or that process, whatever it looks like for them.
I agree. A lot of people have some shame around finances, like, oh, I have bad credit, that means I'm a bad person, or I have a lot of student loan debt. I see people regularly with 6 figures of student loan debt, sometimes 200,000, 300,000. I mean, it's very common now, and it's obviously not a reflection on you. We're not judging you. We're just like here to help and figure out what, same thing with purse strings. Like everyone in their program is here to help you get to the next level. So no one is going to judge.
Right. If we've all made those decisions when we're 19 and 20 to take on this debt, it happens.
Later, I see a lot of people in the Great Recession, in a lot of my industry, we all got burnt.
Yeah.
So a lot of people have been through stuff that's, not their fault, and we don't judge. We just help you get out of it and get to the right spot.
Right. Exactly. And so it seems like more of the options these days are around putting down like 3.5% to 5%. Would you say that's true?
I mean, it's case by case. I definitely do a lot of down payment assistance programs. And so those people, the minimum for down payment assistance is $1,000 out of your own pocket for the program I use the most, the Illinois Housing Development Authority programs. But on top of the down payment, you have settlement costs. So there's underwriting, processing, title fees. You have to pay your attorney, your insurance. So there's different costs that go on top of it. And in a buyer's market, it's very easy to negotiate with the seller to help pay those costs, because in a buyer's market, the buyer has the advantage. And so the seller's like, whatever you need, just buy my house, I'll help you. But right now we're in a seller's market. So often you have the case where you have multiple competing buyers trying to get the same house. So in that case, it's a little difficult to get the seller to agree to give you costs if there's other offers not asking for that. So we are seeing more cases where it is better if you do have a little more savings and don't have to ask the seller for costs, because that will make your offer stronger if you're not asking the seller to help with that.
Right. Yeah, perfect. And somebody was just asking, like, the seller can help with closing costs, which they can definitely, but right now in this market, it's few and far between, for sure.
Right. And there are a lot of submarkets. People talk about the market as if real estate is the same everywhere.
Right.
Each neighborhood really has its own submarket. So there are definitely a lot of more blue collar neighborhoods where I still am seeing seller credits, but a lot of the sort of like higher price neighborhoods, people are fighting over those properties and you're not going to see it. But in a blue collar neighborhood, you could have 5 offers and they're all asking for seller credits, because in that neighborhood, people just don't have a lot of money for down payment, and it's more common in those neighborhoods. So there are some submarkets where I'm seeing it, but majority of cases, if you can avoid asking for a seller credit, it would be better. And again, those are numbers we can run and say, if you don't want to have to ask for a seller credit, so you're in a stronger position, how much money do you need? And then you can have those conversations, look at your 401k account, talk to families, see if they can help, talk to your accountant how much you're getting from your income taxes and add it up and see, what you can come up with.
And those are all such great ideas to get your income from, because I know sometimes people are like, well, where am I going to get $20,000?
Right.
Or whatever it may be. But it does add up. I'm not saying you're going to get it overnight, but it definitely does add up and can lead to a lot of great potential.
Yeah. One more quick note on strengthening your offer, because it is an aggressive seller's market and it's hard to get your offer accepted. We have moved into a mode where we are putting all clients not just through the traditional pre-approval, but a full underwriting approval. And that's something that will give you an edge. So if a seller is looking at 5 offers and 2 of them have pre-qualifications, which are complete garbage, 2 of them have pre-approvals, which are better, but it's not as good as a full underwriting approval, and you have a full underwriting approval, you're giving the seller an indication right away that you're a serious buyer. You're definitely qualified. It's not like maybe you're qualified, maybe it'll fall through. It's much stronger. So you have confidence in it. The seller has confidence in it. You can close quicker because we've already looked at all of your documents. We just need the property specific stuff with the insurance, the title, the appraisal. So the full underwriting approval, in my opinion, is really the way to go. And the clients who are doing that are having a much higher percentage of acceptance on their offers than the clients who are just going in with the pre-approval letter.
That's a really great note. And it's stuff that, you're going to have to get done either way, before or after. So you might as well kind of get that process going. And I think one thing that was always very surprising to me is people should meet with you first before they meet with a realtor. Because everyone just wants to go and pick out that house and ask you, like, do I have money?
Yeah. And if they call the realtor first, a good realtor will tell them, okay, call a loan officer,
Right.
And they have relationships. So realtors know which loan officers are good. And so they'll connect you with their preferred person. So if you call a realtor first, you'll still end up with a loan officer, but most real estate agents will not show you a house until you have the pre-approval, because they don't want to invest their time, but also your time and emotional investment. Like, I love the house, I want it. And then you call and find out, oh, I don't qualify. I need to do some work to build my credit or save more money. So yeah, it's definitely better to have it lined up in advance, have all your ducks in a row. And as far as the timing too, that's the other piece, is that if you see a house you like and you don't write an offer that day, by the next day, it's probably going to be under contract. Someone else came in quicker. So you have to be ready to go right away. And people want to hesitate. Well, let me think about it. I don't know. Maybe there's another house I like more. Should I see more? And I always say, in this type of market, it's better to get the house under contract. And then if you don't like it, you can back out. There are certain allowances where you can cancel it if you don't like it. But if you sleep on it and then decide you want to write the offer, it may be too late. So I would just be, and I know that's hard for some people to like be that quick and aggressive on a major investment, but you do have opportunities to get out. And if you have a good team, which is really the most important step of all of this, is have a good loan officer, a good realtor, a good attorney. If those people are knowledgeable, they're looking out for your best interest, they're going to protect you and guide you through those steps. So even if you're not certain or you feel uncomfortable, you know that they're there looking out for you and guiding you. But yeah, you have to kind of get a little bit comfortable with being quick in this market, or you're just going to miss out and, be sitting around like, oh, I loved that house. I should have jumped on it.
The stories I've heard so far this month of one realtor getting like 161 offers on a house, somebody else who was like waiting for the email to reply to, yes, we want it, so it is super, super fast. And so it is, I know for some people, hard to take the emotion out of it, because it's not just an investment property, but my family's future, and I'm going to raise my kids here. And, we just got married. And so it's like a picture perfect thing.
And it can be emotional, but it's still totally worth it. And it is possible to buy a home. I know some people are like, oh, there's not enough homes available. People are fighting. I'm just not going to find a home. I'm just going to give up,
And with that attitude, you will. You won't.
Right. And I think, you really, if you can find the right home and you have the right realtor coaching you on, you have to write the right offer. You can't lowball an offer and think, oh, I'm going to get it in this market. So if you have, again, the right team coaching you on the right steps to make, you can find the right house for yourself and your family. And it's totally worth it. 2 years from now, you'll be kicking yourself thinking, oh, I should have done it. So I have clients now that are kicking themselves that wanted to buy 2 years ago and they found houses. They're like, well, it's a little too expensive. And now that same house is, 30, 40,000 higher.
Way too expensive.
Yeah. So the longer you wait, the more regrets people have is the experience that I've been observing.
Yeah. And you just have to get that conversation started, with you to see where you're at, the credit score, what you can qualify for, what you want, and kind of figure those things out first. And I really like that you mentioned that you do need a team. It's not just, one or the other, or, you two don't communicate either. Everyone really has to work together. And so you said that the 3 people are really the loan officer, the realtor, and then an accountant.
No, the third one,
an attorney.
The real estate attorney. And with attorneys, it has to be a real estate attorney. I know there are a lot of attorneys that are like, well, I do divorce, but once in a while I'll do a real estate deal. If they're not working full-time in real estate in this market, they are not up to speed. I would not recommend that. So those are the 3 team members you start with in the beginning. And then later in the process, you also bring on a home inspector and an insurance agent. But the loan officer and the realtor and sometimes the attorney are the ones guiding you up front as far as writing the offer, getting approved, what's the best loan program, what's the best purchase price, which houses meet your goals, all of that. So really, that is, of anything I say today, the most important thing. Interview your loan officer, interview your realtor, see how much experience they have, make sure you trust that they're looking out for your best interest, because there are a lot of real estate agents out there. They're not all good. There's a lot of loan officers out there. They're not all good. So you definitely want to make sure you're working with people who have the knowledge and experience and, again, are looking out for your best interest, not just trying to make a commission on a deal like, oh, buy this house, it's fine. I've seen crazy stuff. I saw one house that was actively flooding in the basement and the buyer's agent was like, yeah, it's fine. Let's just close. And I'm like, what?
No.
Buyer on the phone. I was like, you need to fire your realtor right now. I will introduce you to someone better. And now she's in like an amazing property that worked out really well. But I could not believe I literally reported the realtor. I'm like, what are you recommending to your client? You're like, this is, they were just looking out for their own commission. They weren't, and everyone's not like that. So not to scare you, but just do your due diligence. A lot of people say like, oh, well, I know a realtor. My brother's old college roommate is a realtor. Just because you know someone doesn't mean they're good. Because it is, for most people, it's your biggest investment. It's your biggest debt. So you want to make sure you're actually getting that higher level advice, not just because someone does it, but someone who really knows the market, knows enough to give you that advice. And especially if you're doing specialty things. I work a lot with clients who want to buy multi-unit properties where they live in one unit and rent the others. I work a lot with people who want to buy a house that might be a little outdated and renovate it. So if you're doing any of those specialty things, you especially need a real estate agent and a loan officer who have that experience, preferably not just in working with clients, but personally have done, renovations, multi-unit properties themselves. So they know what to look out for, estimating renovation costs, all of that. But even if you're not at that high level, you still need someone good, but especially if you get into some of those more unique products.
And that's why we have all our purse strings approved professionals, just insert our nice little plug here, because we know people like that are not, or some people out there working are not having everyone's best interest in mind. And that's why we have you. And it's interesting because I know you work a lot with Michelle, and we're having her on an Insta Live in a couple of weeks because she has redone a whole place. And so kind of, what does that look like? How do you even start to guesstimate it? Because it is wild. And we just had a conversation about, these different rental things and different things you have to look out for, of parking and, the being allowed to have people rent it and all these different moving parts. So it is really important because there's so much you don't know until it's too late. You don't know what you don't know sometimes.
Yeah. Now, I have a lot of real estate agents I work with, and a lot of them are good, but Michelle is definitely one of my favorites, especially when it comes to multi-unit renovation. She just really, because she has that experience. We have a mutual client right now under contract doing a renovation loan. They couldn't find the house they wanted because there's so few houses on the market. So she talked to them about some other options, like, well, we could just keep looking and waiting for more houses to come available, or you can maybe get an older house and update it the way you want because what you want isn't available now.
Right.
And, so she talked to them about it. They were open to the idea. They consulted with me about it. They found a perfect house. And they're now under contract. They had the contractors out last week to bid the project. It's about like $100,000. So it's they're going to upgrade the kitchen, bathrooms, like it's a pretty big project. But like literally you can ask Michelle. I was like, she called me and she said, we've got the contractor plans done. We're ready to go. I'm like, you just went under contract a week ago. Most people take like 3 to 4 weeks to get all that done. I'm like, how are you done with having the contractor plans? Well, she had everything lined up. She knows the contractors and she sets the deadline. She tells them, hey, you need to come out this day. We need the bid in by this day, and she holds them accountable to it. She was able to move that process really quickly. And I've never seen a realtor move that part of it. That is usually the slowest part of the process. So yeah, she's definitely very good.
Yeah, that's wonderful. And it's so important to have both of you talking, which I always think, in any of these conversations we have, I'm like, introduce your professionals to each other, have them talk, like that way you can really get the best out of everyone. And it's really clear communication.
Yeah. Communication is key. And we're huge fans of that. We send like weekly updates. Everyone knows what's going on, because I find that's like the most stressful part. It's not that there's so much going on, which is stressful in and of itself, but the part where people feel like they don't know and they don't understand and they're not getting communication, and then they get nervous about it. So we try to be proactive in that communication, so everyone just feels comfortable, like, oh, I see the appraisal came in, the value is fine. Oh, I see the underwriter looked at it, this was fine, so they know what we're working on, and they just feel more comfortable, and then they could focus on the things they need to be working on, packing their boxes and picking paint colors and the important stuff.
Finding some movers. Exactly. Yeah. I feel like this has been doused in a ton of great education. Are there any parting thoughts, ideas, words of advice that you want to give our audience today before we wrap up?
I mean, I would just say for anyone who's doubting for any reason, it's always worth a consultation. The consultations, no cost, no obligation. You don't have to be like, oh, I'm buying a house tomorrow. It's really just free education. And if you don't ever buy a house, that's fine. There's no pressure. The information we give you will still help you improve your finances. If it's about building credit, whether or not you buy a house, those tips will help you. You'll get a better rate on your car loans and credit cards. And so there's no harm in ever getting educated. And like I said, there's no pressure. It's really just no obligation. So, it's really just worth taking that first step, having a consultation, seeing where you stand. A lot of people are surprised that they do qualify when they think they weren't going to, because people have misconceptions. I need a lot of money. I need really good credit. And honestly, I've had people tell me that they were turned down to get a cell phone and they got pre-approved for a mortgage.
That's wild.
Because we do have loans that are lenient. We have people who have 580 credit score, and it's, it's fine. We have programs for that. So, so it's always worth just checking it out and looking into it. And then the second thing is again, what I said, the most important thing is interview and hire good loan officer, good real estate agent, good attorney, so you know that you're getting looked out for, and they'll guide you through the process. And that makes a world of difference.
It's so important. And just because we like to be, very transparent on here, in this whole process, how do you get paid?
Yeah. So after the loan closes, we bundle all the loans up and sell them to Fannie Mae or Freddie Mac or FHA, depending on the loan type, and they pay us to buy the loans from us. So the client doesn't actually get paid directly from the client. They don't pay us directly. I said that backwards. They do pay for some services, though. There's a fee for processing because we actually have to pay our processors out of that, underwriting.
Yeah.
But those are standard fees, and it's all like factored in. And that's part of my consultation. After my consultation, I send a long email that has all the details they need to know about different purchase prices, loan programs. And one of the pieces is a sample of all the closing costs. And it breaks down all of the costs so they know. No one has ever said to me at the closing table, oh, I didn't know title fees were that high, because I always educate them on the front end. So my fees are included in that for the processing and underwriting, but our actual profit comes from selling the loan to Fannie Mae afterwards. So that's not directly from the client.
Awesome. Yeah, it's always, important to make clear, because we don't want people thinking, I come in for this consultation and I'm $500 deep. No, it's just a conversation, just like we're having today. And so it's not scary. And so what's the best way for people to reach out to you?
Yeah. One other quick thing on fees too is that the real estate agent, there's no fee on the buyer side. The seller pays for the buyer's real estate agent. So no fees for that either.
So find the best people because they're all the same price of nothing.
Exactly. So I prefer email. That is one of my favorite ways to communicate. So it's marla.barch, BARCH, at myccmortgage.com. I also have a Calendly app where you can schedule appointments with me. So it's calendly.com/Marla's Mortgage Team. And I don't know if there's a way to put it in a chat or send it out or link it to the message. But yeah, that's basically, you can either schedule a meeting directly, or if you email me, I'll give you the link to schedule the meeting. That's definitely the first step.
Awesome. That sounds wonderful. She's also one of our Purse Strings approved professionals. So you can check her out on our website, pursestrings.co. And if you have any questions, reach out to us, reach out to Marla. You're on this side. We're more than happy to help you, get you into a home or see if that's the best fit for you. So thank you so much, Marla, for coming on and sharing all this wonderful information. It's been great. And I hope everyone else has a great St. Patrick's Day.
Yeah. Bye, guys. Happy St. Patrick's Day.